Good morning, FSPG students. My name is Godwin Emmanuel. You're welcome to 2023. Actually, I have not been, I've not really started much this year, 2023, because I've been running around for some things. And right now that we're starting for this year, I want to clear up some things. I believe most of you participated in our um, annual mentorship program. We started from December 2022 and we ended at January 2023. And I want to make some I want to put on some clarification right now. For some of you who are still encountering challenges, I want to do this so that you guys can read this chat with me and also know what you need to do on every pair that you have decided to trade. So there's no pair that is untradeable. I repeat, there is no pair that's untradeable. It's all about making sure you find yourself in the same place where market makers are also looking at, all right? Make sure you're in the same cycle with them. If you're able to be in the same cycle with them, bro, then making money in forex trading is very easy. So I want to go before I go into what I analyzed yesterday and the trade I took yesterday, which yielded massively. I want to go straight up to from the beginning. So you first of all, you must know the history of the chart you're trading. I repeat, number one thing you must do is to know the history of the chart you're trading. You don't have to jump into any chart and begin to trade until you have been able to ascertain the history of the chart you are trading. For instance, this is Euro USD. And in this Euro USD, of course, all of us know that this Euro USD has been on the bullish trend for some time after a very prolonged bearish trend. And I will be going to daily time frame. Let me show you some daily time frame before I will go straight to 4 hours. I'm using 4 hours because I know some of you guys are strictly scalpers. Okay, some of you guys are scalpers. So this is what we'll have in our daily time frame. Okay, so in daily time frame, of course, you'll see this was just coming to the downside until we see it break a major structure here in daily time frame. After I broke a major structure here in daily time frame, market returned back to the OB and then took off. Okay, so now let's go straight to 4 hours time frame, which is the least time frame we're going to be looking at. This is what we'll have in 4 hours time frame. So we'll have days push to downside. Then after that, when market get to this level, markets removed this low. All right, let's stop liquidity. After it was taken out, market broke a structure, got mitigated by this unmitigated block here, and then trade back into the fair value gap. Trade back into the fair value gap. Then it took off and to break this structure. Then breaking this structure again, market got into this level, got mitigated, and came back, trade into this fair value gap to take away this previous high. It went up again, all right, and then come up and remove this level, which is the major change of character on daily, all right, which is major change of character on daily. I repeat, on daily. So if a structure has not been confirmed on daily, please don't take that structure serious. If a structure is not confirmed on 4 hours, don't take that structure serious. All right. So after this has happened, market got here and got mitigated here. After market was mitigated here, you take your Fibonacci level because we want to make sure it's up to 50% Fibonacci level. Then before we start looking for what a position to go long again. So we'll have so your ability to trade either way, I'm talking about your ability to trade either way, either bullish or bearish direction. Here we see market came back to this 70%. After it came back to 70%, market went bullish. So this was a confirmation to us that this market was actually going to keep going bearish. for some time. Then we'll have, I'm going back to daily to show you guys something on daily. So here it's where we'll have this market hit this level, broken this particular structure for us. All right. So after it broke this structure, we give us the change of character. Okay, because you're taking away this particular structure. Then came back and break it down again. Got mitigated here and took off and take away this liquidity here. All right, the buy side liquidity, break another structure, return back to the OB again here, we enter long again. So let me go straight to our daily 4-hour time frame for you guys to understand how this guy do the manipulation and inducement in this lower time frame. I have some of you who has chatted some persons up, telling them that you have little challenge, and that is why I'm doing what I'm doing right now, so you guys can have time to go through whatever we have, all right? And as we hope to start our daily market analysis by Monday and actively commence with our trading for the year, all right, because market has actually started. So here we have this. After this has happened, then we see market keep going to the upside. Market came back, traded into this zone here. Don't get confused when you see internal liquidity is taken out. The work of the algorithm is to create an internal liquidity that they will virtually come back to come and take out. All right. So the question is, why did market not come down to this level? Why have it have to come back to this level and hold this? Because people have been trapped. They don't want to remove them, release them. So they want to hold the level. All right. They want to hold this level. So for some of you who have mental stop, so mental stop is suicidal. So you have to ensure that you don't have mental stop. So we'll have this market go. When it hit this level, it broke market structure. It came back to the other block, all right, and break again market structure, all right. Now, after this break of market structure, it needs to return back to this particular block again. But if you watch, market have to return back to this particular block, this place level here. But this level here became an inducement level. They return back again to this particular other block here. Because between here and here, we'll have also other block there. So market came back to this particular block here. All right. Market got back to this block and then head up and take away this high. So market need to still come back to this particular block here, this other block here. So market kept going to the upside. Your eye should always be on the base, which is either the support level and the demand level. So market has to say come back to demand level for you to take trade. Always remember that there must be what we call the inducement level. And this inducement level is meant for you who trade ICT, for you to also lose your money. So you have to also ensure that you spot out the internal liquidity. If the internal liquidity is not spotted out, then there is a very big problem. There's a very big challenge. All right. So we'll have this, you break the mega structure. Everything inside this level here is internal liquidity. All right. Here we'll have all this. They came back again, traded into this particular zone here, as though you want to go up, enter this fair value gap, and then took away this inducement level, got mitigated by unmitigated other block, and then off. So anytime you see market has done this inducement level, market always pull out aggressively to the upside. If you watch here, there's an inducement level here, market push to the upside. There's an inducement level here, market push to the upside. So if you're able to catch this after spot at the inducement level, you are going to be on better side of the trade, right? Where you can hold the trade for some time and make the market off. So after this happened, market validated what we call the equal highs here, which is what we were taught in your basic the double top. All right. So those who trade double top here, thinking that market double top, it didn't go down. All right. So you're not doing the right thing. So market have to come back, enter into this fair value gap here. All right. And then took off to the upside to take away the buy side liquidity. All right. The double top was taken out. So when they took out the buy stop liquidity, market went up to the upside, created also a block here, leaving this fair value gap. The question is, why must they leave all those gaps? Now, this gap, they are leaving this gap because they are going to come back for it. They're going to come back for it. Definitely, they must come back for it. Market broke the structure to the upside and went to the upside again. It came back here, it broke the structure, went to the upside, and then created this fair value gap that we have here. Market have to come back into it to come and fill this gap. All right, tapping into this OB here. Also, we got a tree to go to the upside to take away this previous high. The market went to this upside and took away this previous high. Then it has to come back again, create endorsement level, come back, remove those level here, then tap into this OB to go to the upside. So most of you guys, some of you guys are always at the wrong trade, or you're spotting the wrong OB. Some of the OB that you are spotting out is what is responsible. You're using the wrong OB. Now, what are the qualities of a valid OB? A valid order block. Number one, a valid order block is an order block that do what? That have at least, that should be a fair value gap. That should be an IFC. That's number one. Number two, market must have pulled away fast from that particular level. That's number two. Number three, it might be what we call a spike handle, like this, like at this level here. So this is also a valid OB because the market came back and tapped into this particular OB here and then move again. All right, this is a spike candle. So market tapped into this spike candle after creating this endorsement level, came back, sparked into it, and moved to the upside again. And then take away this previous high here, build also liquidities that we'll have here, which are nothing but internal liquidities. So we'll have all these as internal liquidities. So market came back, built into it, and then took off again, came back here, spiked into this level, leaving this particular one for the future to be taken out. So market moved to the upside again, all right, came back, created what we call the inducement level, which are also the internal liquidities. So when they come back, they spark into this and come and mitigate the unmitigated other block, okay? And then after that, market pushed to the upside to break this structure. After breaking this structure, it went ahead and break this structure, giving us this particular OB, all right, as the last OB, because we have this OB that is not mitigated, we still have this one that is still not yet mitigated also. Market hit to the upside to this level where it is right now. So what I did yesterday is, because there is an order block here, all right, which market has come to mitigate here. And I'm expecting this market to give us at least 50% pullback. If you watch this was what I analyzed yesterday when I took this particular trade from here down to this level, because I know that the fair value gap they've created, so they must trade into this FVG and come down. All right. So now what I decide, because this market is not yet a full reversal, but we know that this market is going to pull back before the market will control any move push on the upside. So now we are now looking at we're looking at ourselves and asking ourselves question like, what is this market going to do next? That is the question that we've been asking ourselves. What are we expecting of this market next? So we see market, it has given us this consolidation. And after you have seen these moves, when market take off, market will move very fast because it has actually gathered liquidity. So market has been gathering liquidity for some time now, and here it has given you Quasimodo, which is head and shoulder. Then after that, has broken structure on a lower time frame. So let's go straight to lower time frame, like 1 hour, for us to get clear understanding of what this market is actually doing here, and then where this market is likely headed next. So the question here is, why am I looking at market coming back to this particular level? All right, that is the question. Why? Because we have this trend line liquidity. All right, we have this zone here that is not mitigated yet, and also we have also this zone here as area of interest, depending on what the market has given us here. So we cannot tell what the market is likely going to do next. So if you take a Fibonacci from this particular level here, from this zone here, to this level here, of course, you know, we have to 50%, which is this particular OB. So market need to pull back to at least 50% to give us what we call the premium level for us to take a trade. So anything below, anything from that 50, we see any need to go to the upside, we can possibly look at market going also to the upside. All right. So that is what we are looking at. But we want to see a pullback at least 50% of this moves to this level. So we can have at least premium to go to the upside. So now we're still expecting the market to come down to this level before market will go to the upside. So that is what we are looking at in this particular chart. So now let me show you guys what happened yesterday and how I caught amazing pips with a good lot size. Now, yesterday, this was a fair value gap I spotted out on 4 hours. Let's go to 4 hours and see the fair value gap. Look at the fair value gap between here and here. So I was expecting market to trade into this level to go down. So this was an area I was looking for entry to sell the market down. In 1 hour, here we'll have the internal liquidity, which is an inducement level. All right, this is an inducement level. Market came back and tapped into this level. But there's area of concern. What is that area of concern? In 4 hours, this is where we'll have a kind of this is where we'll have the fair value gap where it started. But on daily, if you watch on the for 1 hour, we'll have the fair value gap here. Okay, so we are looking at what this market is going to give us. So market has broken the structure between here and here. So let's take our Fibonacci from this particular point to this particular point here. So as you can see, this is where our interest is going to be on selling this market. So anything that if market has not gotten to this level and this market did not give you this, it didn't come back here to come give you entry to sell here, you can just simply ignore, because our job is to what? Is to sell at a premium level. Okay, so you have to be patient enough, because anything that you see, any setup you are seeing outside the premium level is nothing but an inducement level. So what you are seeing now is an inducement of this market, looking for a way to give you an inducement before they will go to the upside. All right, so this market might likely give you something like this. We might see something like this. This is inducement level because it's not up to 50%. 50% is somewhere here. So all this is inducement level. Market will do this and come back again, do this, validate double top, and come back again, tap into this level to give us our entry here, give us a break of market structure in a lower time frame, and then push to the downside. So if we have something like this, then we can say, okay, market has actually validated this fair value gap. Sometimes you may see them come back to come and hit this particular OB. If they want, they might use a spike this OB, and then push the downside. So your job is for you to wait for this market to see that this market has gotten into this fair value gap before you take off any trade. Please, I repeat, take your Fibonacci and make sure you are operating at a discounted level so that you can maximize your position. Now here also we have here also we have okay, this fair gap. This is an inducement level that hit this level. Now you need to push to the upside, but there is fair value gap. Tap into this fair value gap. So we'll be expecting to see this market push down, all right, tap into the FVG and come down to hunt those trend line liquidity level again, all right. They've hunted it here again before this push. So we want to see them come back again. Then we'll go up here, then come back and hunt this level. Once they hunt this level, then we'll be expecting to have them come back to mitigate the particular zone here that has not been mitigated. If you watch, this is also a valid FVG where market has not really hit. So our eye will be on this market coming to this level. When market hit this level before we start looking forward to look for a buy. That is what I just want you guys to look at on this particular time. I expect we see market, because this is not our father's market, so we can see otherwise, whereby you may see market come maybe a very big spike that come here and close above this level. If you close above this level, then expect a pullback, then you go with them, because we trade what we see, we don't trade what we feel. But always make sure you are patient enough to see market give you what you are looking at. But what, based on the market makers model, right, and ICT and everything, we're expecting to see this market, but because we are seeing this market at level trade, we want to see this market come back, trap into this level, and then we're going to go to downside. So that is it. So they might kind of build liquidity to downside. There is a spike to come up again, tap into this, then go down. Don't be panicked. Always, don't be confused by these people. Always make sure your eyes must be at that particular point where you're looking at to get your position to sell. All right. Don't panic. Don't chase the market. Market may start moving down, forget about it. If you come down and break your market structure, good for you. Then you have to still know that you're still waiting for this at the premium level. Do your Fibonacci. As market is coming down now, don't just begin to chase it because this market is going down, 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 down. No, don't chase it. You have to wait. Market will definitely give you an entry. All right. It will ever give you an entry. So, guys, I just want to share this because I caught this particular market. I caught it somewhere here. All right. I caught it here. This level here. This was where I cut this market and I rode this market to this level here. When I tapped this level, I took out my profit because I know this guy will look for a way to tap and come into this fair value gap before they sell. So the point where this market is right now is where I took out my position yesterday. And I'm still expecting them to find a way to come into this particular level. All right. So when they tap into this level, then we'll be expecting to see what these guys will do. Let's go to 15 minutes, guys, and let's look at if there is any block in between this level here, all right, that will market will likely come into. Let's go to 15 minutes before I end this. Yes, we'll have a breaker block here. This is a breaker block. It's a breaker block. So market is taking out this previous high, this previous low, taking it out. If you take it out, good. They'll find a way to go to the upside, good. So just wait for this market to come into this level before you think of selling. Okay. So thank you guys very much. And you'll have a perfect day as we expect us to be fully back by Monday. All right. I'll be resuming my daily analysis by Monday. Thank you guys very much and be blessed. I remain Godwin. Thank you.